Will the stock market soar to new highs in 2025, or crash harder than ever? The truth is, the next 12 months will be anything but boring. From AI dominance to global conflicts and interest rate shifts, the investing landscape is about to change dramatically. In this video, I'm breaking down 7 high-stakes predictions that could either make you rich or leave you holding the bag. Listen, we're not talking about some science fiction fantasy here. This is real, people. Artificial intelligence is already weaving itself into the fabric of our lives, and it's about to weave a whole lot of profits for savvy investors. Forget ChatGPT, that's just the tip of the iceberg. We're talking about a seismic shift in how businesses operate, how we live our lives. And when I see a seismic shift, I see dollar signs. Who's going to power this AI revolution? Who are the real winners? I'm talking about the chip makers like Nvidia, the ones building the brains of these AI machines. These guys are printing money faster than the Fed. And don't even get me started on the cloud titans like Microsoft. They're the landlords of the digital age, providing the infrastructure for AI to thrive. These companies are like utilities, folks. Everyone needs them, and their earnings are going to be off the charts. But wait, there's more. We can't forget about the companies building the picks and shovels for this gold rush. Infrastructure providers like Snowflake and Palantir are sitting on a gold mine of data, the lifeblood of AI. They're the ones making sense of it all, and their insights are going to be worth a fortune. This isn't some far-off dream, people. This is happening right now, as companies realize that AI isn't just some fancy toy, but a necessity for survival. These stocks are going to explode. So, if you want to be a part of the future, if you want to be on the right side of history, get on board the AI train because it's leaving the station and it's not coming back. Alright folks, let's talk about the elephant in the room, the Federal Reserve. They're like that friend who always orders the most expensive thing on the menu and then expects you to split the bill evenly. They've been on a rate hiking spree trying to tame inflation, but they're walking a tightrope here, and one wrong step could send the market tumbling. If they slam the brakes on rate hikes too soon, we could see a repeat of the dot-com bubble, with growth stocks soaring to unsustainable heights. Tech darlings, speculative plays, they'll be off to the races, but it won't be built on solid ground. Remember, what goes up too fast can come crashing down even faster. On the other hand, if the Fed keeps its foot on the brakes, if they stay hawkish for too long, we're talking about a whole different kind of pain. Real estate? Forget about it. Mortgages will be through the roof, and those REITs, they'll be singing the blues. And it's not just real estate. Banks, consumer discretionary, even industrials, they'll all feel the pinch. Higher borrowing costs are like kryptonite to these sectors. So, what does this mean for you? Buckle up, because 2025 could be a year of two halves. One side of the market could be flying high, while the other is left in the dust. This is a stock picker's market, folks. You need to be discerning, strategic, and most importantly, informed. Don't get caught on the wrong side of the Fed's next move. Forget what you think you know about the global economy. The BRICS nations, Brazil, Russia, India, China, and South Africa, are rewriting the rules of the game. They're tired of playing second fiddle to the US dollar, and they're creating their own orchestra. More and more countries are joining their ranks, attracted by the promise of a new world order, one where the balance of power shifts away from the West. This isn't some conspiracy theory, folks. It's happening right before our eyes. And what does this mean for you? Volatility. Currency swings that'll make your head spin. Remember the good old days when you could just park your money in the S&P 500 and sleep soundly at night? Those days are over. The rise of the BRICS means we're entering a new era of uncertainty in global markets. Commodities, currencies, even bonds, they'll all be caught in the crossfire. But hey, who said investing was supposed to be easy? This is the big leagues, folks. To navigate this new landscape, you need to be nimble, you need to be informed, and you need to be prepared to adjust your portfolio accordingly. The BRICS nations are a force to be reckoned with, and their impact on global capital is only going to grow stronger in the years to come. Listen up, real estate investors, because I'm about to tell you something you might not want to hear. Those REITs you've been clinging to, they could be headed for a world of hurt. I'm talking about a perfect storm brewing, and it's about to rain on your parade. First, we've got commercial real estate vacancies at record highs. Nobody wants to be stuck in an office these days, and those empty buildings are costing REITs a fortune. And don't even get me started on retail. With online shopping taking over the world, malls are becoming ghost towns. Second, Interest rates are still on the rise, making it more expensive for REITs to refinance their debt. It's like trying to put out a fire with gasoline. And with the Fed poised to keep tightening, this problem is only going to get worse. And finally, we've got urban flight. People are fleeing big cities like rats from a sinking ship, leaving behind a glut of overpriced apartments and condos. This is a disaster waiting to happen for REITs invested in these areas. So, what does this mean for you? If you're holding on to REITs, especially those focused on office and retail spaces, it might be time to cut your losses and run for the hills. This is not the time to be greedy. Protect your capital and look for opportunities in more resilient sectors. Chapter 5. Gen Z will redefine investing. Hold on to your hats, folks, because Gen Z is about to turn the investing world upside down. They're not just digital natives, they're digital revolutionaries, and they're bringing their own set of rules to the stock market. Forget about traditional brokerages and stuffy financial advisors. Gen Z is all about mobile-first platforms, social trading, and getting their financial advice from TikTok influencers. They're not afraid to take risks, they're not afraid to make a quick buck, and they're not afraid to challenge the status quo. We've already seen a glimpse of their power with the meme stock craze. Remember GameStop? AMC? Those weren't just short squeezes, they were a shot across the bow, a sign of things to come. Gen Z is demanding more from their investments. They want companies that align with their values, they want transparency, and they want to be part of a community. This means we're going to see a surge in demand for ESG investments, fractional shares, and alternative assets like cryptocurrencies. So, if you're still stuck in the old ways of investing, it's time to wake up and smell the coffee. Gen Z is here and they're not going away. Adapt or be left behind. Chapter 6. ESG backlash is coming. Now let's talk about ESG, and I'm not talking about some fancy new stock ticker. I'm talking about environmental, social, and governance investing, the hottest trend in finance that's about to hit a wall, a brick wall of reality. For years, ESG has been the darling of Wall Street. Fund managers couldn't shovel money into ESG-labeled funds fast enough. It was like a virtue signaling contest, with everyone trying to outdo each other with their commitment to saving the planet. But here's the thing about ESG, it's gotten out of hand. Companies are being rewarded for ticking boxes instead of delivering actual results. We've got energy companies claiming to be green because they planted a few trees, while their oil rigs continue to pump out pollution. It's hypocrisy at its finest. And now, the backlash is brewing. States are pulling money out of ESG funds, accusing them of being more interested in pushing a political agenda than generating returns. Investors are starting to realize that ESG is no guarantee of profits, and in some cases it might even hurt their returns. So, what does this mean for you? Be wary of ESG hype. Don't just blindly invest in a company because it has a good ESG score. Do your own research, look at their actual track record, and make sure their values align with yours. Chapter 7. Bitcoin ETFs will disrupt Wall Street. Alright folks, let's talk about the elephant in the room, or should I say, the Bitcoin in the portfolio. Bitcoin ETFs are here and they're about to shake things up on Wall Street. For years, institutional investors have been dipping their toes into the crypto waters, but with ETFs, they're diving in head first. This is a game changer, people. We're talking about billions, maybe even trillions of dollars flowing into Bitcoin. And why not? It's a decentralized digital gold rush and everyone wants a piece of the action. But here's the thing. Bitcoin is volatile, it's unpredictable, and it's not for the faint of heart. We could see Bitcoin soar to new all-time highs, or it could crash and burn, taking the entire market down with it. So what does this mean for you? First, don't panic. Bitcoin ETFs are a great way to gain exposure to crypto without having to navigate the complexities of buying and storing it yourself. But be smart. Don't bet the farm on Bitcoin. Start small, diversify your portfolio, and be prepared for a wild ride. This is the future of finance, folks, and it's going to be a bumpy but exciting journey. So, what do you think? Will 2025 be a goldmine for smart investors or a trap for the overconfident? Let me know in the comments, and don't forget to like, subscribe, and turn on the bell for weekly investing breakdowns. See you in the next one.